Now and bring in Michelle Schneider, Partner and Director of Trading Research and Education at MarketGauge.com. Michelle, good to have you kick off the week with us here. Tell us what you make of the market activity today. I know that we have yields in the bond market coming down a little bit, but is your expectation that this rally really has some legs in the stock market?
Well, I certainly hope so, because it makes for a much calmer day when the yields are actually going down as opposed to up, especially for us investors who are pretty well invested across the board. But well, last week, Powell did not do the market any service. He didn't say the things the market needed to hear. In fact, some of his language was almost bordering on the bizarre, because he was implying that there would be inflation, but it would be a healthy amount of inflation. It would be a temporary inflation, that there would be growth, and that too would be temporary, actually leading a lot of investors like me to think, is he really trying to say the evil S word, which is stagflation? So the fact that now we have a lot of other Federal Reserve people coming in today and speaking a little bit more calmly about the yields is a good thing. So that's why we're seeing the movement now into NASDAQ and some of those growth stocks after they really fell out of favor. Hopefully this will maintain itself. From a technical standpoint, Alexis, I will say that the TLTs in particular went all the way down to an 80-month moving average. So that goes back for years and years and years. It's a real turn of a business cycle. And people were talking about this is the end of the 40-year rates. It's all going to reverse and everything's going to go up. And people got nervous. So basically what it did is fall into this very long-term support and has bounced considerably. So hopefully that's it. But you got to be ready for anything in this market right now.
You certainly do. And I know we're seeing the market rotating back into growth, at least for the time being. But what are you doing with your clients right now? Are you buying into that?
Well, we were fortunate in that we had bought Facebook a couple of weeks ago. So we've actually already taken a profit and looking for a second one. And we bought SunPower, sat a little bit underwater, but that also has come back today. In terms of investing in other NASDAQ stocks, we're in Bidu. We're also a little underwater coming back. So we haven't gotten too heavy back into the growth stocks, but just a little bit putting our toes in the water. Interestingly enough, where we have most of our money is still in the commodities. And the inflation talk has been interesting to us because the food commodities, which I know you and I have talked about for about a year now, had come off to a critical point. Really, basically, it was a make or break point today in that corn, wheat, soybeans, all sold off, coffee, and they've holding. So that tells me that we're still looking at that inflation narrative. And so when we're looking longer term, that's where we're looking to invest, is in some of those names that will protect us in case inflation does go up and the economy after initial boost actually more stagnates.
I know that you're actually looking at metal miners right now. Can you tell us a little bit about what you like in that space in particular?
Well, I definitely think that they have been completely undervalued, GDX being the ETF, silver another one. And we actually bought gold today for the first time in a long time. And that's a little bit nerve-wracking, so we have a relatively tight risk. But all of the metals have so underperformed. When I say all the metals, these metals have underperformed, say, copper, steel in particular, platinum, palladium have done better. So if we are going again into more of an inflation narrative or a reflation or whatever you want to call it, these metals to me look interesting and at fair value at these points. At least we know exactly where the risk is, which would really basically be under the most recent lows. So yeah, I think the metal miners actually made the first move up a couple of weeks ago before gold and silver have. And generally, as it's known in the commodities business, the miners lead the other metals up. So we'll see. But I think it's good, especially if the rates come down. And then, of course, the dollar is a factor in that, too. And that's come down as well. Not for reasons of inflation, for other reasons, but nonetheless, it helps the commodities market.
Michelle, are you using crypto at all as a hedge against inflation?
We have. I always like to tell this to people, and I hope I don't insult my poor clientele, but they are an older crowd. So they don't like to actually buy the coin itself. So we've taken advantage of Bitcoin in particular, through companies like MicroStrategy and Riot and Canaan. We were long the Grayscale GBTC for a while. We're out of all of that right now. We're looking at more into an Ethereum type play. There is an ETF for that. It's not great. But right now what we did do was we bought a SPAC, which is the FTCV, FinTech SPAC, which is related to eToro, which is the Israeli platform that trades a lot of crypto. If they merge and go public, that will be a very, very big play, I would believe, in that particular SPAC. That's the only skin we have in that game right now, but we're waiting. This dip is encouraging. I want to see where it stops.
I'm curious what you're doing with housing-related stocks, if anything. I mean, we know that we're having mortgage rates now. It looks like they're sitting above 3% for at least the foreseeable future. We've got very tight inventory. Builder confidence slipped last month. And today we found out that previously owned homes, the sales of previously owned homes fell more than expected month over month. So are you doing anything in particular with real estate related stocks right now?
Not right now, but we have a little teeny exposure more into infrastructure, which there's an overlap there because some of those companies provide materials for both housing and for infrastructure. So one, for example, is Fleur. I think it's pronounced Fleur, but anyway, the symbol is FLR. That is definitely tied to both because it provides asphalt and other types of things that one might need for housing projects. But I could just tell you here in Santa Fe, for example, the housing prices went skyrocketing. The cost of goods to build new houses skyrocketing, and yet the amount of new construction skyrocketing. So to me, that's not the time I like to get into a move when it's at its last gasp. We try to look for things as they're starting to develop.
Makes sense. Michelle Schneider of MarketGauge.com. Thanks so much. We appreciate it.